Welcome to the deep dive. We're always hearing about AI, right? The amazing new models, the big tech companies, it's
Yeah.
all algorithms and data. But what if the real story, the foundation for all that AI magic, isn't just the code? What if it's about the incredibly complex machines and specialized factories actually making the hardware? That's what we're digging into today. Two companies, ASML and Taiwan Semiconductor, or TSMC, maybe not household names, but absolutely critical to this AI boom. Our mission, to give you that kind of aha moment, to understand the infrastructure, the plumbing behind the whole AI revolution.
Exactly. We're going beyond just the headlines about AI models. We want to unpack, where these companies stand, what their opportunities are, but also the real challenges they're facing. It helps you see the bigger picture, understand the tech landscape on a much deeper level.
Yeah, and we're basing this on a really sharp analysis we found that puts these two head to head, asking basically which AI stock comes out on top. So let's get into it. It's easy to just think about the software side of AI, isn't it? The code, the data
Right,
centers.
the digital stuff.
But none of that works without the physical hardware. Every single AI model needs these incredibly powerful, tiny processors. And while the big names design the AI, actually making those cutting-edge chips, that's a whole different ballgame. It's kind of the engine under the hood,
Yeah.
often overlooked.
It really is. And if you connect the dots, you see that understanding these companies, these foundational players, is key. It's not just about components. We're talking building blocks etched with unbelievable precision that let AI actually do what it does, learn,
Mhm.
process massive data, be fast. Without their output, the AI revolution just stops. It's absolutely fundamental.
Okay, so let's start with the first piece of that foundation, ASML. Their name might not be on your phone, but they're essential for it. So ASML, they have this incredibly unique spot in the market. They don't make chips.
No, they make the machines that make the chips.
Exactly. Specifically, these super advanced machines using extreme ultraviolet lithography, EUV. These are the tools needed to etch the patterns onto silicon, creating those tiny, powerful processors for AI.
And what's fascinating here truly is the tech itself. These EUV machines, they're working right at the edge of physics, using light with incredibly short wavelengths.
Hmm.
That's the extreme ultraviolet part. It lets them draw patterns on silicon that are just mind-bogglingly small. Think billions of transistors on one chip.
Right.
And that miniaturization, that's what gives us the processing power for today's AI. It makes it faster, more efficient. And here's the kicker. These machines are so complex, so expensive to develop, ASML is basically the only game in town.
The only one?
Pretty much, yeah.
Wow.
For this cutting-edge EUV tech. So any chip maker needing the best, they have to buy from ASML. It's a near monopoly on something absolutely critical.
Okay, a near monopoly on the essential tool. That sounds like a pretty sweet spot, market-wise.
Yeah.
Huge opportunity, right?
You'd think so, and in many ways it is. But, and this is a big but, they're facing some serious headwinds. Geopolitics, mainly.
right.
Yeah, so you have to ask, how does all this global uncertainty hit a company like this, one that's so central to the tech supply chain? They've been dealing with complex trade restrictions, like the U.S. rules about selling advanced tech to China. That's not easy to navigate.
No, I bet not. Limits a huge market.
Exactly. And their own CEO, Christophe Fouquet, he basically said recently, and I'm quoting here, "We continue to see increasing uncertainty driven by macroeconomic and geopolitical developments." He added, "Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage."
Oof. Okay, that's cautious.
Mhm.
A real shift from maybe more bullish talk before. And that caution isn't just talk, right? It hit their numbers. They actually lowered their sales estimate for this year.
And they did, down to around 32.5 billion euros, but maybe
Yeah.
up to 35 billion before. So a tangible impact from that uncertainty.
And the market reacts to that kind of thing.
Oh, definitely. When management sounds cautious like that, investors get nervous. And you saw it in the stock price. ASML shares, down about 13% over the last year. It shows even a tech leader with unique tech isn't immune to these bigger global forces.
Right. And just for context, their market cap is around $292 billion, trading at a PE ratio of about 28.
Yeah, price to earnings of 28. So investors are paying 28 times earnings per share. Reflects that long-term potential maybe, but also factors in those risks.
Okay, so that's ASML, the architect, facing some clouds.
Mm.
Now let's shift to the other player here, Taiwan Semiconductor, TSMC. And this is where the story takes a different turn, doesn't it?
It really does.
If ASML makes the tools, TSMC is like the master craftsman using them. They're the world's leading dedicated chip manufacturer, the foundry.
The world's AI foundry, basically.
Yeah. They take designs from companies like NVIDIA, Apple, all the big names, and they actually produce the physical chips at incredible scale and precision.
And their dominance is just stunning. They hold an estimated 90% of the market for advanced processors.
90%. Seriously.
90%. So
Yeah.
think about that. When NVIDIA needs its latest AI chips made, TSMC isn't just the first call. It's often the only call that can handle the volume and the complexity.
Wow. Yeah.
Their factories are basically these high-tech cities running nonstop, churning out the brains for the AI revolution.
And that demand, it's not just theory. It's showing up big time in their growth. Their management thinks AI sales will double just this year.
That's the estimate. Doubling AI revenue in 1 year, it shows how locked in they are to this boom. It's explosive growth, not just steady progress.
Can you give us some numbers on that?
Sure. So Q2 revenue, up 38% to $30 billion. And earnings per share, well, per ADR, the way U.S. investors buy it up, and even stronger, 61% to $2.47.
61% earnings growth. That's firing on all cylinders, as they say.
Absolutely. It signals incredible efficiency and market capture right now. They're riding the biggest waves of the AI boom.
And their CEO sounds pretty confident about keeping it going.
He does. Wendell Huang, the CEO, he said, moving into third quarter 2025, we expect our business to be supported by strong demand for our leading-edge process technologies.
Basically, the pipeline looks strong.
Okay, so that confidence, that growth,
Yeah.
it paints a very different picture from ASML's recent story.
A stark contrast, yeah. While ASML's stock was down, TSMC's share price climbed about 40% over the past year.
40%. Compared to the S&P 500's, what, 15% gain?
Exactly. Significantly outperforming the broader market. It just highlights how differently investors are viewing these two essential companies right now.
Now, TSMC isn't without its own clouds, right? Even with that amazing growth, there's a big one everyone talks about.
The geopolitical risk? Absolutely. Their location in Taiwan is, a constant background concern. It's not hypothetical.
It's very real. Potential conflict there that impacts everything. Everything in the tech supply chain. It's a major uncertainty that's always factored in by investors, by governments, by their customers. And staying ahead technologically, that costs a fortune. TSMC pours billions and billions into R&D and new factories, these fabs, every single year.
Right, the innovation treadmill. They have to keep running faster just to stay in front.
Huge financial commitment. Plus, they rely heavily on a few massive customers. Think Apple, NVIDIA.
So concentration risk. If one of those big guys changes plans.
It could have a big impact, yeah. So while some folks worry broadly about, when will the AI boom end, these specific TSMC challenges, geopolitics, cost, customer concentration, are more immediate. That said, our source suggests the consensus is that strong demand isn't going away anytime soon. The end of the boom seems pretty far off right now.
Gotcha. And the numbers reflect that size and maybe that risk. Market cap is enormous, $1.2 trillion. And the PE ratio.
About 26, so slightly lower than ASML's 28.
Interesting. So despite the explosive growth, the market might be pricing in a bit of that geopolitical risk, or maybe just expecting truly massive future earnings to justify that huge valuation.
Could be a bit of both, yeah.
Okay, so we've looked at ASML, the essential toolmaker facing headwinds, and TSMC, the dominant manufacturer riding a huge growth wave, but with its own significant risks. So based on the analysis we looked at, how does it shake out? When you put them head-to-head as AI stocks right now, who looks stronger? What did this mean for you listening?
Well, the verdict from our source was pretty clear on this specific comparison. Looking at recent performance and the immediate outlook, they concluded that Taiwan Semiconductor is the stronger AI stock right now.
Okay, and the reasoning behind that?
It really comes down to performance. TSMC is just delivering consistent, really impressive growth in sales and earnings. That 90% market share in advanced chips is hard to argue with.
Yeah, indispensable.
And they're directly benefiting from this AI market expansion that just keeps rolling.
Whereas
ASML, while absolutely crucial long-term, is currently dealing with more visible turbulence. The tariff issues, that lowered forecast, it creates caution for investors in the near term. Again, doesn't make ASML unimportant, just means TSMC looks like the better performer in this particular snapshot.
And that small valuation difference comes into play too, right?
Yeah.
TSMC's PE of 26 versus ASML's 28 maybe seems slightly cheaper for more current growth.
Exactly. It adds another small piece to the puzzle. Maybe you're paying a little less, relatively speaking, for that faster current growth trajectory, even considering the risks involved with TSMC.
So this raises a key point for you listening, doesn't it? While TSMC might be winning this stock matchup today, ASML is still fundamental. You can't have one without the other, really.
Precisely. Both are absolutely vital for AI's future. It's just that their current situations, their stock stories, are quite different because of performance and those external pressures. It's a complex relationship.
So hopefully you've now got a much clearer picture of these two giants working behind the AI curtain, ASML making the incredibly specialized tools,
The unique machinery.
and TSMC mastering the actual production of those advanced AI processors, this whole intricate ecosystem.
Way more complex than just software. And if you zoom out, understanding this relationship between the tool maker like ASML and the manufacturer like TSMC, it gives you a much better sense of the strengths, but also the vulnerabilities of the entire global tech supply chain. It really makes you think,
Hmm.
what happens if one of these critical pillars stumbles? Maybe because of geopolitics, maybe the cost of innovation gets too high. What does that do to the future of AI?
Yeah, the ripple effects would be huge, not just for stocks, but for innovation everywhere. It shows why you need to keep digging into the details. That's where the real understanding lies.